Mentioned up 23% just this week. One of the most hated stocks about a month and a half ago is now turned into one of the darlings of the market. Let's bring in Caroline Wood, senior markets correspondent here. Caroline, it's so funny how the sentiment has turned so quickly on the stock, based on some delivery numbers that were still weaker than a year ago. But everybody seems to be on the Tesla train right now.
Yeah, certainly seems to be the case. As you said, Tesla up another 6% today. It was up 10% yesterday, now up about 24% this week alone, and still negative on the year, but only down about 1.2% year to date at this point. So I think that's the comeback has been pretty impressive. It's a second half darling, if you will, but we're only on July 3rd, right? So a lot of time to go. You mentioned those deliveries still fell 4.8% from a year ago, but was better than expected, certainly better than the whisper number, and also sequential improvement from Q1. So really seeing some signs of life in the EV demand picture, if you will. And we've heard from several analysts that have been weighing in following these results, including several bears. And I can tell you, despite the bullish momentum continuing today, those bears aren't bulls. The bullishness, there certainly are bulls, but the bearishness continues among several analysts on Wall Street. Just to kind of run through some of the commentary that I've seen, Bernstein kept an underperform rating on shares with a price target of 120, does not believe that Tesla will achieve its goal of growing unit deliveries this year unless it materially cuts prices and provides very favorable financing, which of course they say pressures margins and free cash flow. They don't see a lower cost Model 2 arriving in volume before 2026 and anticipates that new lower cost models in 2025 will be relatively modest tweaks, which are unlikely to stimulate demand, tweaks to the Model 3. Meanwhile, Guggenheim did raise its price target on Tesla, but only to 134 from 126, so kept a sell rating on shares, saying a 5% delivery decline never looked so good. The analyst there believes that most of the 10% jump was actually due to record energy storage deployments, not car sales. That's something else that other analysts are bullish on that actually are bulls as well, specifically Garrett Nelson over at CFRA. Wells Fargo kept an underweight rating on shares with a $120 price target, saying fiscal 2024 numbers are still in question. Obviously, the expectation around the annual number is 1.8 million, which would be about flat. But other analysts are thinking that could be weaker. The first half of 2024 pace implies 1.66 million annual run rate, according to Wells Fargo, which would be down 8% from 2023. And then J.P. Morgan also kept an underweight rating on Tesla with $15 price target. And the analysts there actually focused on the fact that vehicle deliveries declined year over year by that 4.8% for a second straight quarter, despite global battery EV market growing 22% in Q2, saying this implies significant share loss. We know competition is heating up, so JP Morgan really focused on that. But of course, there are bulls as well. BofA raised the price target to 260 from 220, kept a buy rating, saying both Tesla and Rivian sales show there are some signs of life in terms of EV concerns or EV demand concerns. And then, of course, Wedbush's Dan Ives raised his price target to 300 from 275, has a bull case of 400 for 2025. He thinks the worst is in the rearview mirror. He says Tesla's march towards 2 million units annually should be reached over the coming quarters, and says Tesla is the most undervalued AI play in the market in our view, with a historical robotaxi day ahead for Musk and Tesla on the 8th that will lay the yellow brick road to FSD and an autonomous future. So Dan Ives getting even more bullish there. Obviously, all of that negative analyst commentary, though, not weighing on shares today. They're still up about 5.4% at this point.
So, Caroline, I mean, obviously, we probably are seeing, new bulls getting into this particular space, some short sellers getting out as well, which is probably fueling this rally to the upside. But my question for you, when you're looking at the analyst notes, you brought up the energy space, and it's a very small slice of their overall business, but it has rapid growth. Are you seeing any analysts really trying to factor that into their projections moving forward, knowing that we just saw their business pretty much double their capacity in a matter of a quarter? And that side of their business generates around $1.6 billion worth of revenue. I mean, that could actually tip the scales for top line and bottom line growth in the coming quarters.
Yeah, actually, Garrett Nelson over at CFRA, who now has a $250 price target, still a buy rating. He's obviously a friend of the network and has been a Tesla bull for quite some time. Actually pointed to today's rally as, or the gains that we're seeing as due in large part to that energy storage growth. He says that's becoming an important aspect of the story. It's something we don't talk about a lot, but Tesla sells backup battery storage to residential customers and utilities. And Kevin, as you said, it deployed 9.4 gigawatt hours of storage in the second quarter. That was a record, and the prior high was 4.1 gigawatt hours. So a huge jump like that could impact obviously sales and earnings estimates. So even the bears, I had mentioned one, looked at that as potentially positive to earnings. And then the bulls, like Garrett Nelson over at CFRA, says that's becoming a bigger part of the story. So it's not just, the automotive sales as we know, it's the AI component with the robotics and the autonomous vehicles that will get that robotaxi event on August 8th, which should be, the bulls think a huge catalyst for Tesla, although the question is how much is priced in at this point. But that energy storage is definitely a part of the business that we should be taking a closer look at as well.
Yeah, a couple more catalysts coming up. Earnings on the 23rd and that August 8th robotaxi event. All eyes will continue to be on Tesla. Thanks to Caroline Wood, Senior Markets Correspondent here breaking down the story here. But